Let's just talk about trust deed investment basics. We've got two documents that are common, trust deed and a promissory note that everybody's going to sign. So what's a trust deed? What's in that?
Basically what a trust deed is, that's a document that's recorded. So that'll be recorded. Let's say we're doing a $100,000 note. The trust deed would also be for $100,000, so that would be recorded against their property.
Okay.
There's a beneficiary on the trust, or now moving to the note.
Yeah.
The note has a beneficiary, which would be the private party. So that's the person who lends the money.
Okay, the beneficiary is the lender.
Yes, it would have a trustor, which is basically the borrower.
Okay.
So that's the person that borrows the money.
Right.
And then it would have a trustee, and that's basically a company that kind of is involved a little bit in the servicing of it and in that capacity.
Okay. There's also three players named in a trust deed investment. So you still have the beneficiary.
Yes.
Who's the lender, you have the trustor who's the borrower, but now you have a broker, and that's what the Norris Group serves as a broker, kind of a go-between between those two parties.
Exactly.
And we'll talk about the benefits of that in a little bit later segment. California is a trust deed state versus a mortgage state, and the advantages of that are, there's a few of them. One of them would be speed of foreclosure.
Yes.
And cost, does it cost different to foreclose on a trust deed?
Yeah, basically with the trust deed foreclosing on it, it's just, as you mentioned, it's a quick process, and the cost, it's just very uniform. You pay a certain amount to get the process started, then you pay a certain amount to go to what's called publication, which would happen after 90 days, and then basically you're at the end of the line.
And also, lawyers don't have to be involved in that process, where in the mortgage states they do.
Yes, and that's much cheaper, obviously.
Okay. Craig, we've got tens of millions of dollars of people's money currently invested in trust deeds. Why do they like to invest in trust deeds?
I think most of the people that invest in trust deeds with us, I think, one, they like the return. You're getting a much higher return than you're going to get in a bank, especially now in these times. They like the safety of the investment. It's secured by real estate. And a lot of our investors really like the passive nature of the investment. A trust deed investment doesn't involve going to a rental house, fixing it up, tenant moves in, moves out. You always seem to be doing something. With a trust deed investment, it's just a very passive investment. And I think that's probably the one word that is uniform for our investors. A lot of them like to be passive in their investment.
We're known as a hard money lender.
Yes.
So how would you define hard money lending?
Well, hard money, I think, is misconstrued a lot of times. They think it might be difficult to get or something. The whole time I've been doing it, which is 25 years, basically I think hard money just refers to what we opened with. Hard money is just using private money.
Okay.
So it doesn't mean that it's any harder than anything else. Actually, it's easier if you meet certain qualifications.
Now, it may be more expensive in points and so forth.